perfect. I started recording. Okay, the recording has started, so I'll be able to actually share the recording with you later on. It has started recording now. All right, perfect. Okay, so we have different types of costs. The main type of costs are three. There's a fixed cost, there's a variable cost, and there's also a semi-variable cost. So these costs are actually affected by the level of output or by the level of production. Let me give you an example. Before I come to the definitions and everything else, let me just give you an example. I like giving examples. So we are looking at cost behavior, basically how costs relate to their output. Okay, so we have two things here. We have a cost and we have the output. Okay, by output, we are basically talking about production, how much we produce. By the output, we are talking about production, how much we produce. So the cost is actually in kwacha, we estimate cost, and then the output, this is in units because it's production. So do you remember my desk example in our last session? Remember my desk example in our last session where we talked about desks and nails and wood? You remember that particular example?
Yes.
Okay, now imagine this. Let's say, let me just say material. Okay, as our material cost. I'll say nails. Okay, let's say we have a nails material cost that we incur every single time when we want to produce a desk. I'll use the same example because I feel it's actually very easy to understand. So let's say we have a nails material cost. We have a nails material cost. Okay, so the cost of producing one desk is, for us to produce one desk, we'll have to spend about 15 kwacha on nails. Okay, what we are aiming for is 5,000 desks. Okay,
Okay.
are you seeing it?
Yes,
Just
yes.
yeah, the cost of producing one desk is 15 kwacha. No, no, the cost of the cost of one nail rather is 15 kwacha. Let me drop it because one nail isn't really. Oh, okay. Let me just not really one nail, but a packet, that the number of nails that we need for a desk. Okay, we spend
Okay.
15 kwacha for the total number of nails that we need for each desk. So if in terms of materials, it costs us 15 kwacha for each desk, meaning the total will be 15 kwacha multiplied by the number of desks. It will be 75,000 kwacha, right?
Yes.
Yeah, it will be 75,000 kwacha on the nails. Okay, and then let's say the wood, it's 50 kwacha and it's 5,000. That's the output, that's the production, that's what we want to produce. So it will be the same 50 kwacha. You just pick it up with the formula, multiplied by the number of units, which is 5,000. So have 250,000 kwacha. Let's say we have another cost here, rent. We pay rent of 15,000 kwacha every month. Our rent, is it affected by production? No, because we pay for the entire building. It's not affected by the output that we produce. Okay, it's a monthly fee, a monthly expense. So it's still 15 kwacha. Okay, but
15,000.
yeah, 15 kwacha, 15,000 kwacha, yes. But this rent, this building that we are renting, or this factory, can only accommodate 7,000 desks. So for as long as it's below 7,000, then we pay 15,000 kwacha because we only need one building, right? You get my point, sir?
Yes.
Yeah. And then we have some other expenses. Let's say stationery for our accounts team or admin department or sales team. Yeah, stationery, that's our books, our pens, paper, or printing, whatever we need. Let's say we spend 5,000. This will still be the same, right? Okay. So if we produce 5,000, if we produce 5,000 units of desks, our total cost will be 345 as our production cost. You're seeing it, right? Our total production cost
Okay.
will be 345,000. Okay, so this is what I want to explain. In this breakdown that I've just made, we have materials, we have wood, which is also materials, and then there's just 1 minute. Oh, yeah. So let's say okay. Hello, sir. Are you still there?
Yes.
Okay. All right. Okay. Sorry for that. I was looking at these costs. Okay. So we have like we have direct materials here. Okay. We have material here in nails. We have wood, and we have rent here. We have stationery. Okay. So since we are looking at cost behavior, we want to see how these costs relate to production. Okay, so material costs, if let's say we produce 2,000 units, do you think it will reduce from 75,000 kwacha to something a little lower, or it will remain the same?
Come again.
Let's say, for instance, our material cost in nails, our nails cost, which is our material cost. If we were to produce desks that are less than 5,000, let's say maybe 3,000, do you think this 75,000 kwacha will remain the same as 75,000 kwacha, or it will reduce?
To reduce.
Okay, how about the wood
Even the wood also reduce.
and the rent?
The rent will remain the same.
Okay, stationery.
Stationery. I don't know in terms of stationery because uh, I presume that it might also reduce.
Okay, all right. So stationery will actually remain the same because the admin stuff is basically the same. So the printing will be the same. Um, whatever typing work they do will be the same for the ink, the printer. Okay, I think everything is the same because the way it is that even if they stop producing any desk, for as long as they're running a business, they'll still need to acquire stationery for their various departments because of many maybe mandatory requirements. And also there are some other direct costs. We can talk about the labor for maybe the accounts team. Whether they produce any desk or they don't produce any desk, the accounts department still needs to be paid and they still need to work. You get my point, sir?
Yes, I know on stationery I'm a little bit confused in there because if also they are related the stationaries when you are producing these desks, maybe they might change, maybe not. I don't know on that one. That's why I really need clarification.
Okay, let me explain. So in terms of stationery, we are looking at office stationery, not
Okay,
anything they need in their factory. Because if there's anything that's pertaining to stationery that they need in their factory, meaning it to be a direct material. And here I'm looking at office stationery. Let me just say office stationery.
okay.
Yeah. So office stationery, it's for the office, so it will remain the same. It's not affected by production.
But it should be added to production.
Yes, This is the
Okay.
total production cost or the total business cost for us to have those desks. Okay. All right. But they are
Yeah.
either for us to, yeah, total production cost we add the stationery. Um, but anyway, there's something else that I'll explain later on as we proceed with cost accounting. But for now, let's just say total production. We add the office stationery. I'm avoiding to use some words, yeah, because I want us to be very steady and careful with the terminology so that we understand it. Okay, so now we know how these particular costs relate to production. For instance, wood is not affected, nails are affected by production, wood is affected by production, rent is not affected by production or it's affected up to 7,000. Office stationery is not affected by production. Okay, so if we were to look at the types, would say material is a variable cost, wood is a variable cost, rent, I can put it up as semi-variable in this case, and stationery will be a fixed cost. Yeah, fixed cost. Okay, just a second, I'll just close the windows since there's noise coming from outside. Hi, much better now. Can you hear the noise?
I know.
Okay, perfect. Okay, so we have wood and nails, which I'm saying is variable, and then we have a semi-variable cost in rent. Um okay, have a semi-variable cost in rent. So basically, I've actually identified this particular cost. I've told you their types. Don't worry, I'll define them. But in actual sense, we have already defined them because I've given you the examples already. So the type of cost is basically an explanation of how that particular cost relates to the production. Okay, a cost that does not relate to production in any way is not affected by production in any way, like our office stationery. We actually call that cost a fixed cost. A fixed cost is a type of cost that remains the same regardless in the change of production, whether production increases or production decreases, that cost remains constant, just like our office stationery right here. Okay, let's go
Yes.
to what our PDF document is telling us. Our fixed cost. A fixed cost is a cost which tends to be unaffected by increase or decreases in the volume of output. By volume of output, we are basically talking about our production. Okay, by the volume of output here, we are talking about our production. So if we produce 2,000 kwacha, 2,000 units, and we spend 2,000 kwacha on stationery. Even if we produce 5,000 units, still our stationery should be 2,000 kwacha because stationery is a fixed cost. It's a cost that is not affected by um, um, production or
Change.
output. Okay, so you see, here we have the cost and here we have the volume of output. So the fixed cost is right here. Even if even if production increases, it's still the same. It's not affected. Examples of fixed costs, we have a salary of the managing director, the month per annum. Yes, it's a fixed cost. Or basically, all indirect salaries are fixed costs. Salaries for let's say the accounts department, that's a fixed cost. Salaries for okay, any person's salary who is not affected by production or sales, because the only salary that we can say is not fixed, we can talk about firstly. Um, if we are paying our workers who are producing our desks as per the number of desks they produce. So meaning labor will be a direct cost. Okay. Or we are paying our sales department as per number of desks they sell. That will be a variable cost. Okay. So they're saying rent of a single factory building. Do you remember in our example? In our example, rent is a variable cost. Sorry, in our example, rent is a fixed cost. Okay, for as long as it's below 7,000, it's a fixed cost. The reason why I'm scoring it as semi-variable, it's because it has got a potential to become a variable cost because it's a fixed cost for a certain level of activity. But after we skip that level of activity, it will become a variable cost. That's why it's a semi-variable cost. It is affected by production at a certain level of activity. You get my point, sir?
Yes, yes.
Okay. Are we okay with what a fixed cost is before we go to a variable? And if okay, let's do this just to ensure that we both understand what a fixed cost is. Apart from stationery and rent, and the labor that I brought in, kindly come up with an example of a fixed cost and tell me why you think it's a fixed cost.
Mm, on that one, I might not be sure of what I can say, but uh, from what I read, there was a straight line depreciation of a single machine.
Straight line depreciation of a single machine. Yeah, I would say
Yes,
it's a fixed cost because it's a straight line depreciation. Okay.
yes.
Yeah, it's correct. That's actually correct. Straight line depreciation is a fixed cost because it's actually a fixed depreciation. So even the cost is fixed. Yeah, so it's not really affected by what we produce. Right, now let's go to variable costs. So from the
Maybe. I don't know. Maybe some other, as the government pronounces the budget, there are things that they mention which can just be there for a year. I don't know whether those you can consider them as fixed
which
cost.
ones? Which ones?
I'm saying, there are some fixed costs which are pronounced in national budget. Let's
Uh,
say,
yes, sir. Hello, hello.
Hello.
Yes, sir.
Yes, I'm getting you.
Yeah. Sorry, sorry. I can hear a vibration. Hello, 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 sir. Are you still there? Hello, sir.
yes, sir. Yeah, sorry. You know these things where your mother is just calling you constantly. I was just telling her that I'm a little bit busy.
Oh, okay.
Yeah. Okay.
All right. Sorry, I wasn't really getting what you were saying before you received the call.
Okay. I was saying that. Uh, what can I say? What was I figuring out? Okay. Let's just proceed.
Oh, okay. All right. Okay,
Yes.
but fixed costs are costs that are not affected by production. So any cost that is not affected by production is a fixed cost. All right. So from the example that I gave you on the discs, let's see. How about you try? Just think about an example when I'm talking about costs that are affected by production, costs that are not affected by production, all that. Just think about it and try to define a variable cost. Sorry, I've decided to actually move up because I'm trying to hide the definition. Okay, yeah, but try to define a variable cost.
Oh, okay, for me, I feel it's that change, which is proportionally with the level of output,
Yeah.
or which is proportional with the level of output. So for me, that is a very change. That for me, that is a variable cost.
Okay. Yeah, so a variable cost is a cost that's affected by production. Like, for instance, our nails cost and our wood cost, those two are variable costs. So here, the definition that shows here is a variable cost is a cost which tends to vary directly with the volume of output. The variable cost per unit is the same amount for each unit produced. Okay, so there's one thing that I didn't explain. Fixed cost doesn't really have a fixed cost per unit. You can estimate it, but because it's not affected by production, if you are to produce something else, you have to take it back to the origin and estimate another one again. So what we call that an overhead absorption rate, because overheads, maybe there's a new word here. Overheads are basically indirect expenses. Okay, you'll probably be seeing it a lot in cost accounting. Overheads are basically indirect expenses. So an overhead absorption rate is basically a rate we absorb our fixed cost at. Like, for instance, we have a 2,000 kwacha in fixed cost and we produce 2,000 units, meaning if we were to absorb those fixed costs as per the number of units, our overhead absorption rate will be one kwacha. It's more like one kwacha per unit of material, per unit of production. You get my point, sir? But
Yes,
if we were to produce some other things, we have to divide it. We have to multiply it again by the original units because it's not affected by production, and then afterwards, take it back to the total fixed cost. But for the variable costs have a cost per unit. Like, for instance, our nails cost is a 15 kwacha per desk, and our wood cost is 50 kwacha per desk. This does not change. And by the way, when we're talking about cost accounting, we have a number of assumptions that we put into consideration. They're not always factual. It's not like in actual business they'll be exactly the same because there'll be things that will influence them. Like, for instance, we have inflation. So this will probably change at some point. But our assumption here is that the variable cost per unit will remain the same per level of activity. It will just be affected by the number of activities. You get my point?
yes,
So our assumption here is that the nails that we need for one desk is 15 kwacha per desk, 15 kwacha per desk, and it will continuously be 15 kwacha per desk until it is updated. And we are basically saying we need 15 kwacha for all the 5,000, it's 15 kwacha. It might be different. Maybe after we produce 3,000 and then inflation hits us, it tends to 17 kwacha. You get my point? Or
uh,
there is inefficiency whereby you bend some nails when you are hitting them with a hammer. So you need more nails. Because you need more nails, the cost will shoot up because you probably need nails that cost more than 15 kwacha. Okay? Due to inefficiency.
yes,
Yeah, so that's basically just an assumption that we put into consideration every single time when we are looking at this topic, or basically when we are looking at this subject, because even in some other topics, we'll be talking about the same. And trust me, if you were to understand cost behavior in details, understand what a variable cost is, what a fixed cost is, and you can comfortably give examples, then you'll be in a very good position to actually start these other topics because cost behavior is the foundation.
okay,
Yes. Okay. So let's proceed with the costs. So examples here, they're talking about, as you can see here, we have the cost and the volume of output is basically moving directly in proportional. Like when the output increases, the cost increases. And like here,
okay.
where the output increased, but the cost still remained the same.
Mm,
Examples here, we have cost of raw materials like our wood for our desk and our nails for our desk. direct labor costs, like the labor that I was talking about, where you pay people per number of desks that they produce. Mainly, this is for factory employees. So all factory employees are actually direct costs. If you were to take it to to income statements, you did financial accounting already, right?
Yeah, I did it some way back.
If we were to
Yeah,
actually relate this to financial accounting, all direct costs, like for instance, raw materials, labor, sales commission, bonuses payment, anything that's related to production will actually be in our manufacturing account. You remember the manufacturing account?
yes,
Yeah, okay, perfect. All right. So these are direct labor costs, they are factory wages. Sales commission
okay,
are variable costs because they are affected by the number of desks that we sell.
okay,
And then bonuses are practically more like commission in that they come as a result of you making a very good sale, or you producing, or you being super efficient and producing a lot of desks.
yes,
Okay. So, like I mentioned, the three main ones are fixed, variable, and semi-variable. We'll get to semi-variable later on today. Okay, no worries, we'll do it today. But I'll go to the next one, which is step costs. Okay, so step cost is a type, but it's not really like the amongst the main ones. Or let me put it like this: the main ones that you'll be seeing in all your papers, the entire ZICA manual are fixed costs and variable costs. Okay, I'm sure you've actually cruised through a past paper, or you've actually cruised through the manual, or basically some ZICA documentation pertaining to cost accounting. If you have, then you can actually confirm right now that you saw a lot of fixed costs and variable costs, but you didn't see a lot of step costs unless they want you to define it, right?
yes.
Yeah. Okay. All right. So let's get to step costs. Okay, so the saying a step cost is a cost which is fixed in nature but only within certain level of activity. So do you remember our semi-variable cost?
Yes, that is rent.
Okay, yeah. Okay, so rent can either be a semi-variable cost or a step cost. Imagine if rent we like for instance in our example here, uh, our factory can only accommodate 1,000 units. So every time we want to produce slightly more, we'll have to increase our rent.
Yes,
Yeah. So if we want to produce 2,000, we'll have to increase double our rent. If we want to produce 2,500, the rent will still be the same. So it's fixed. And then if we want to produce 3,500, we'll have to double our rent. So basically, it's more like a step. You get it?
mm-hmm.
Yeah. So example, we can talk about the same rent. Rent is a step cost share where accommodation requirements increase as output levels get higher. Basic pay of employees nowadays is usually fixed, but as output rises, more employees are required. So yeah, it's also a step cost. So the only difference between a step cost and the semi-variable cost is that a step cost happens uh, more oftenly. Like every time you want to increase production, uh, per a certain level of activity, you have to increase the expense again. But for a
Mm-hmm.
semi-variable cost, okay, a semi-variable cost contains, it's more like a step cost, but it happens once. It has got a fixed component. It's fixed for a certain level of activity, like that example that I gave you, where I said, for us to produce 5,000, okay, I have the perfect example here. Okay, you see this 15,000 kwacha that we pay. If we
Mm-hmm.
decided to produce 8,000 units, you've seen how this will go to 120 and this will go to 400. Stationary will be remain the same, but the rent is just for 7,000 desks. So basically, it will hit to 30,000 because we need to rent another building. You get my point, sir?
Mm. Yeah,
Yeah, so this is making it semi-variable because it's fixed up to 7,000 disks, but immediately just hit 7,000. That's the limit. For us to produce some more disks, we'll have to rent another building because our disk will be full by then. Our factory will be full, so we need some other space to actually do our manufacturing from. So that makes it a semi-variable. So a step cost is more often a semi-variable has got two components, that's fixed and variable. Okay, so an example is this. As you can see here, it's variable, and then here it becomes fixed, and this is fixed and it becomes variable. And yes, it can also be the other way around. Okay, let's see. Let me find a very good example. Uh, Oh, you know how we have certain expenses, okay? Certain expenses, like for instance, let me use our electricity bill, or let me use our water bill. Water bill. Let's say Swasco. Since you are from Lusaka, so here we have Swasco, okay? It says that
Yeah,
that's the utility company. Yeah, Swasco charges you as per the liters of water that you use. They have a meter actually to read that. Okay, that makes it
mhm,
a variable cost. You get my point, right?
yeah.
But what if you use up a lot of liters and the cost is shooting very high, and then they have a maximum amount that they can charge you, just like the way NAPSA has a limit. Let's say I'm not saying they have a maximum or not. I haven't really checked, I haven't confirmed this information. This is just an example, okay? So let's say the maximum you can pay Swasco is 4,000 kwacha for home consumption in
No,
terms.
maybe if you can put it like the water utility companies,
Yes.
they have got bans. They have got bans that maybe if you use water uh, up to this, you'll be charged at this amount. If
Yeah,
you cross this band to this, you'll be charged in this range. So
mm,
maybe I don't
okay,
know, but
okay,
that is what I've realized. They have got more like if you use more water, it's like Zesco. If you use your electricity within a month, there's a charge that you are given. But if you
yeah,
consume and finish, when you go and buy again, you'll be charged more.
yeah,
You are not going to get it as when you first bought electricity in the first day you bought.
yes, sir.
I don't know whether that also fits in that because
Okay,
I've seen that happen.
that I can actually say it's more like a step cost.
Okay, that falls under step cost.
Yeah, I can say it's a step cost.
Okay.
Yeah, for the semi-variable, let's see. You do NAPSA, right? I know NAPSA is not really, it's a contribution, not
Hello?
really an expense. You make NAPSA payments, right?
Yes.
Okay, so the maximum that someone could contribute at NAPSA as of last year, I've forgotten the figure for this year, as of last year is 1,490 kwacha. That's the limit. Okay, so if you're earning a salary
I
of
think
maybe, I'm saying the maximum that someone can contribute as of last year, I know they've updated it, probably maybe 1,7 now. I'm not sure, but as of last year it
yeah,
was,
somewhere there.
yeah, as of last year it was 1,490 kwacha. And then
Okay.
yeah, so it's the limit. So if it was entirely variable, people would actually even pay more. Some would pay 5,000 kwacha in NAPSA, but no one does that. Okay, so basically NAPSA is variable in that it's affected by the pay. You get it? But at some point when the pay is very high, it will just hit the limit and it will stop there. That's a semi-variable cost. More like here, it's variable, but because you started getting a lot of money, it just hits the boundary, the benchmark, and it stops there.
Okay.
Yeah, you get my point, sir.
So, you say semi-variable cost is a combination of two components. That is what and what?
The variable and the fixed. We have variable cost and we have fixed cost, but when you combine these two types of costs, we come up with a semi-variable cost.
Okay. Okay.
Yeah. Okay.
Yes.
There's actually a method that we use when determining the fixed components and the variable components, semi-variable cost. Because in the exam, what I've noticed, because I've actually solved a lot of past papers, trust me, a lot. Yeah. So what I've noticed in the exam is that sometimes they'll give you questions when they give you an exam question, and they'll give you a cost per unit. They can say, oh, producing one desk is 16 kwacha in terms of materials, 16 kwacha per desk. But when you calculate, you notice that it's not really the same. Like you find that this month it's 16 kwacha, the other month it's 17 kwacha, the other month is 18 kwacha. What this means is that in that there is a fixed cost and there's a variable cost.
Okay.
Yeah, so that makes it a semi-variable. It's affected by production. Some component of it is affected by production, and some component of it is not affected by production. So, for us to actually understand or basically apportion the two costs or separate them or identify them, we actually use a method which we call a high-low method to identify them, where we compare the highest and the lowest in terms of units and costs and find the differences, and then afterwards we divide to find the total cost per unit, of which we represent our variable cost per unit.
Okay.
All right, perfect. So I'll just quickly read through this, and then afterwards we'll solve the example that is in this question. Okay.
Okay.
All right. So we have a number of steps here in the document that I shared with you. Um, Okay, I feel I don't know. I'm actually imagining if it was me. So I feel as though if I were to just read this, you won't understand. You get my point.
Um,
Yeah, if I just say, oh, the steps are number one, select the period with highest activity level. By the way, when you talk about activity level, we're looking at production. Okay, activity level,
uh-huh.
production, units. Lowest, this is basically I've practically told you the steps because I said we basically compare the highest and the lowest in terms of cost and production, and then afterwards we divide the differences to find the variable cost. See, they're saying select the period with the highest, select and then the total cost at the high activity level, total cost at low activity level, you find the difference, and then total this is total the total units at high level, activity level, total units at you find the difference, and then calculate the variable cost per unit. You've seen that I've basically explained all these steps in just that phrase that I explained.
Uh-huh.
I said get the highest and the lowest in terms of costs and units, find the differences. Okay. After you found the differences, divide the differences to get the variable cost per unit. And after you found the variable cost per unit, you can use that to find the total variable cost. And when you have the total variable cost, you can subtract that minus the total cost to get the fixed cost. Because the total business cost, the total cost of doing business is fixed cost plus variable cost. You agree with me, sir, right?
Yes.
Yeah. So for us to properly do business, we are basically just paying our fixed cost and our variable cost, and then that's it. That's just the way it is. Okay, so I have an example here. I know there's a solution at the bottom, but I'll try to leave it out. Okay. Um, Here, DG Limited has recorded the following total costs uh, during the last 5 years. DG Limited has recorded the output total cost during the last 5 years. So I'll assume this is 2010. We have 2010, 2011, 2012, 2013, and 2014. Units, we have 65,000, which had 145,000. We have 80,000, which has 162,000. We have 90,000, which has 170,000. We have 60,000, which has 140,000. 75, which has 160,000. So basically what we're going to do, we're going to do a comparison between the highest and the lowest for us to find our variable cost so as to satisfy our high-low method. Why are we doing this? Because the 145,000 is a semi-variable, or it's a total cost, meaning it has got a fixed component and a variable component. The reason why we're using the high-low method is so as to apportion it. We want to find the total fixed cost, and we also want to find a separate total variable cost. You get our objectives, huh?
Mm-hmm.
Yeah, basically that's what we're trying to achieve. By the time we finish this, that's what we must have. Oh, and I'll do a comparison in the answer. I haven't looked at the answer right now, okay, but I'll do a comparison. You can even come with some other questions, or you can find some similar questions. Trust me, it's always the same. And this likely to come in June. Okay, all right. Let me just. Okay, so before we start the actual computations, kindly identify the highest and the lowest.
The highest and the lowest.
Yes.
The highest is the 170,
Okay. Sorry, I'm not.
and
Oh,
the
yeah.
lowest is hello.
Yes, you can still see my screen, right? Because I just hit something that show share screen. It was obstructing me
Yes,
from.
I'm saying it.
Okay, all right.
Yes. So the highest is the 170, and the lowest is 140.
Okay, the highest is that's in terms of costs, and then we have 90,000 and 60,000 respectively this side. So if we identify
Mm.
the highest and the lowest in terms of costs and in terms of units.
Okay.
Okay, so our let me do this. Let me just say cost units high low. Okay, difference cost. I'll change the cost to kwacha and here the units. Okay. Do you have the question open with you? No.
Yes.
Oh, okay. All right. So what you said our total cost, our highest cost is what?
Highest cost is 170.
170,000. So it'll be like this. Okay, and okay, so we have 170,000 kwacha, and the units for the 170,000 kwacha are
90.
90,000. So yeah, we'll bring in our 90,000 units here. We have 90,000 units right here. Okay, and the lowest,
The lowest cost
yes, sir,
is 140,000
140,000. And the units,
and 60 units. 60,000 units.
okay. All right. So the difference between the two is 170 minus 140, giving us 30. And the difference between the units is 90,000 and 60,000, giving us 30,000. Okay. So our variable cost per unit will be, we'll have to divide our 30,000 by, we have 30,000, 30,000.
Mm.
Looks strange. I guess it will be one quarter. This is one strange question, eh? Okay. Um, yeah, I guess it will be. Okay. All right. I have found the variable cost. Okay. So the question is calculate the total cost that should be expected in 2025 if output is 85,000. Okay. So we'll actually calculate that. But first, we have to find our total fixed cost and our total variable cost. Okay. Hello.
Mm. Yes,
All right.
yes.
So if it's like this, then our variable cost will be 1 kwacha. So yeah, then our variable cost will be 1 kwacha. Okay, this is 30. This is all right. So meaning if it's like this, then our total variable cost, like for instance, for our 170,000, it was 90,000 units. So it will be 90,000 units multiplied by the total variable cost per unit, which is 1 kwacha. So this will be our total variable cost. This is for the highest one. And then the fixed total fixed cost for the highest one. I'm just showing you the breakdown. So total fixed cost for the highest one will be 170,000 minus the 90,000 variable cost, meaning it's about 80,000. And then that's why the total cost is coming to, yeah, 170,000. You've seen how I've broken down the 170,000.
170,000.
Yeah, I've multiplied my variable cost per unit by the number of units to get the total variable cost. And then after I found the total variable cost, I removed it from the total cost so as to find the fixed cost.
Okay.
Yeah. So basically, I can try to prove this theory again. Let's say we find the total variable cost again for the lowest one. For the lowest one, the total variable cost will be the 60,000 units times 1. It's the variable cost is 60,000, and the fixed cost will be the difference between the 140 and the 60,000, and it has to be 80,000. You've seen? So basically, what this means is that in every time they have a fixed cost of 80,000. Here they had a fixed cost of 80, 80, 80, 80, and 80. This means that even in this current year that we want to calculate for, we have a fixed cost of 80,000. You get my point, sir?
Come again.
I'm saying, okay, let's start from the beginning. Do you understand how I found this?
Uh, is it as same as getting a fixed cost? Is it not as same as 90 from uh, 90 from 170?
Yes, that's what I did. But you know how we found the 90?
Yeah, by multiplying it with the unit cost.
Yes, the variable cost. Yeah. And then for us to find the fixed cost, we just subtract the variable component from the total cost, because the formula for total cost is like this. Total cost is equals to variable cost plus fixed cost. You get it, sir?
Yes, yes.
So after we found this, we just removed it from this to find this.
Mm.
So now that we have the fixed cost, we know because the fixed cost does not change it's not affected by the level of production. So meaning every single year they pay a total of 80,000 kwacha in fixed costs.
Okay, yes.
Yeah. So this means that even in our 2005 or 2015 or 2025, this that we are looking for, we already have a fixed cost of 80,000.
Yes.
Okay. So if we have a fixed cost of 80,000 and we want to produce 85,000 units, okay? Meaning we just have to find the variable cost, which is affected by production. So we'll have to find the total variable cost. So we know the variable cost per unit. Our variable cost per unit is 1 kwacha. Okay? The one that we calculated. And what we are looking for is the total variable cost. The units that they want to produce are 85,000. So the total will be 1 multiplied by 85,000, which is 85,000 itself. We want the total cost. The total cost is fixed cost plus variable cost. So let me bring in the total fixed cost. We know the total fixed cost is 80,000, right?
Yes.
So our total cost for us to produce this will be
Answer.
165,000.
Mm-hmm.
Yeah, it will cost us 165,000. So for us to produce 80, we paid 162, 90, 170, 85, 165,000, 75. You see? Okay. All right, perfect. So we actually have all the answers as correct. I was just checking, counter checking. Um, yeah, I don't know, maybe the method might be slightly different, but we still have the same answer. I actually feel the method that we use is actually easier. What do you think?
Which one?
I'm saying I actually feel what we did here was actually more easier and straightforward. What do you think, sir?
Mm, yes, the same, but it's like this is also in relations with the what you find in macroeconomy. So they are almost similar, where you say total revenue, what total cost.
Yeah,
They are almost the same in terms of formula, where you get this because you subtract this out of this. Because
yeah,
like total cost is made up of fixed and variable.
yeah.
So I think I've understood.
Okay, all right, perfect. Okay, so this is the high-low method that we use to actually separate costs, to actually identify variable components and fixed costs in either a total cost or a semi-variable cost. Okay, sir. So on everything that I've explained on cost behavior, do you have a question?
Mm, uh, I can just maybe share, or maybe what I've understood is like an old, or I think there was an old way of saying fixed cost can't change; it will remain as fixed.
Yes.
But I think that notion is no longer there because if you have got an extra, like the way you say that in a room where your production of 5,000 days was fitting in one room. So
Yeah.
meaning if you go beyond your production, let's say maybe 7,000 or 10,000
Yes. Yes.
or 9,000, you need an extra room to rent at that amount of money. It might be of the similar amount or even more, uh,
Yeah.
more rental instead of the maybe you find that it's here we're talking of 15,000. Maybe the room that you get from a different person, it might be 20,000.
Yes, sir.
So that also will change, meaning uh, rentals are no longer just considered as fixed because it contains it can contain uh, two components, but
Yes.
it depends on the
The production.
what word should I want to, what it should have a relevant range.
Yes. Yes.
Yes, it can also change when it reaches a certain range. So that is what I've gotten from all the explanations. Like in terms of rentals having two components, fixed and variable. So it becomes semi.
Oh, yes, sir.
Yes.
Okay,
So
perfect.
that is the cost behavior.
Yeah. Okay, so basically, in summary, we can say cost behavior is just us understanding the cost, that the different types of costs that we find in cost accounting. Okay, these ones are fixed costs,
Yeah.
variable costs, and also semi-variable costs. Those are the main ones. Step costs, yeah, we do have step costs, but you won't really find it in any paper unless you are defining it, because the step
Okay.
cost acts as though it's a semi-variable. So
Okay.
what you'll be finding most of the time when you're finding the total production cost is this variable cost, semi-variable cost, and okay, mainly it's fixed cost plus variable cost. You'll find semi-variable
Uh-huh.
cost in some instances, but it's not very common. If they bring semi-variable costs, there's a high chance that they need you to use the high-low method to separate the semi-variable cost into fixed and variable, because they know that what you need to use are the fixed and the variable components of it. So you have to make sure you
Okay.
understand the high-low method that you just solved as well. Were you writing it down?
Yes, yes.
Okay, perfect. So you just have to make sure you master the high-low method, because you might need it during the exam. Yeah, I'll find some other questions that will solve pertaining to the high-low method, so that we get very familiar with cost behavior and cost elements, uh, so that we get to understand our fixed, variable costs and our semi-variable costs in details with very good examples. All right. So if you don't have any questions, we'll actually let's see if you don't have any questions. This is basically what we were supposed to look at today. I'll have to find some other questions on high-low methods to ensure that we cement it before we go to. Mostly in my sessions, what I do is after I talk about this, we go to a different one. Yeah, but for you, I'm looking at basically cementing the knowledge. You get my point, sir. So
Mm-hmm.
yeah, because that's my objective. That basically means that you won't move away from cost behavior just now. If you understood it, that's very good. But now we have to cement it so that you become very familiar, you become very comfortable with it. The main reason is because this is the foundation of cost accounting. Every topic will have aspects of cost behavior. It's practically cost accounting. So yeah, you have to know how costs behave. You get my point, sir. Because you find variables, fixed
Okay.
costs, in every topic: process costing, job costing, marginal absorption costing. You look at costing methods, activity-based costing. Everything will be looking at cost behavior. Okay, everything will need the knowledge of cost behavior. Like before we go to a different topic, we have to be comfortable with cost behavior. You get it?
Yes.
Yeah, so that's what we're going to do. So this session is actually being recorded, like I mentioned. I'll upload it on my Google Drive, and I'll share the link with you, just like I shared the other session. Did you watch the other session?
Yes.
Okay, perfect. All right. So I'll share the link with you so as to rewatch this particular one as well. If you can try to find some similar questions on cost behavior, try to cruise through this particular document or any other material you might have. That would be very good. And if you were to probably, I know you probably won't be comfortable to solve a paper, but just passing through a ZICA past paper, seeing if you now understand their questions, or basically some components of the question, not solving the answer, but just reading the question and seeing that, oh, after this lesson, you are comfortable with at least a sentence or two in the past paper to show that we are moving towards the right direction. Okay?
Okay.
Yeah. But also,
Noted.
yeah, but also try to find some other similar questions, mainly pertaining to high-low method and cost behavior, that I'll probably share with you, if not today, tomorrow, that you can try to solve.
Okay, boss.
All right.
I appreciate.
Okay. Otherwise, for today, let me just stop this. Okay. Since now you have a copy of the